Hello, folks, and welcome back to another edition of the Cryptex LiveWire. Joined here with Monty. Nasdaq leading down today as it's down about 1%. Bitcoin pretty much flat. And going to talk a little bit about the Dow today, as well as how low Bitcoin could possibly go and some targets that we're looking at. But Monty, good morning. How you doing, sir?
Doing well, CJ. Thank you. And yeah, I think the title of today's episode is probably the most asked question I get asked by friends and relatives. How low will Bitcoin go? I think that's the question that's on everyone's mind. And, we've talked a lot about some possible targets, but we'll kind of reiterate those points. The 100-week moving average, I think, is a great target from a technical perspective, but we can definitely take a more in-depth look at that as things go on. But if there's anything you'd like to start with, please feel free to do so. The floor is yours, my friend.
Yeah, we've definitely talked about the 200-week being an interesting target, but I want to talk about a new indicator that we haven't discussed in terms of on-chain stuff today. So
Cool.
I will go into something known as the balanced price, courtesy of Bitcoin Magazine. Balanced price, really all that you need to know. I mean, this is how it's calculated, but the balanced price measures the difference between what holders paid on average and what is being realized or spent across the network. So this is kind of interpreted as a fair or balanced valuation, and that's based on some of the on-chain metrics. We've been talking a lot about percentages in terms of the average bear market pullback. 2014, it was 85%. 2014, 85%. 2018, about 80%. Last bear market, 77%. So a current 70% correction in the current trend would put us at about 37 to 40,000. So it's very interesting to see that we are actually, in confluence with that level on the balanced price. And as you can see, each previous bear market, this has been a pretty good bottom indicator, or at least where price likes to kind of touch down and consolidate for a while. So, let's just keep it simple. These are what the indicators are telling us. So I don't think there's a huge desire to mix it up, at least in my opinion. So I thought that's, just another indicator that kind of gives us some confluence in some of the targets we've been talking about already. But I also have some traditional markets I'd like to talk about and some stats from there. But if you have any comments on Bitcoin or anything like that, or even the balanced price, feel free to bring it up.
Yeah, I love that you brought up the balanced price. I think that's a great indicator, especially to look at kind of just a good price target. It's a kind of, you can use it in conjunction with that 200-week moving average, I'd say. But, that's a good on-chain representation of where people are at. And if you look at some other on-chain metrics as well, I don't have them handy right here with me, but I talked about them on Tuesday's webinar. Things like net unrealized profit and loss, they're all pointing in a very similar direction right now. And one thing that is pretty surprising is that even though we're down pretty big and Bitcoin's continuing to grind down, I'll pull up the chart. The net unrealized profit and loss is not even anywhere near its peak. So we've had, 2 weeks of very negative price action, which isn't surprising given the fact that equity markets have been down, and given the fact that we've seen sell pressure pretty much across the board in all major risk assets. It's no surprise to see Bitcoin down pretty substantially, but we are finding a little bit of balance here at 67K. CJ talked about the concept of filling the wick. I think that that's something that is definitely on the table here for Bitcoin in the next couple of days to weeks here, is filling this wick and heading down towards 59K. When we first tested 60K, we saw some pretty significant supply absorption and price go back up. This was in conjunction with people shorting the market at the bottom, but we did see some pretty decent spot buy pressure come in, and that's indicative from the volume that we saw as well. So we saw some buyers step up and take a risk at 60K, you know, and I don't hate that. If you think about, kind of the bigger picture here, and we talk about some of these lower targets around 45K, in the grand scheme of things, what is ultimately the difference between 45K and 60K if we're talking about a 200K Bitcoin? It's not that much of a difference. And it goes with that concept that we were talking about earlier in the week. And CJ, I think you did a great job kind of nailing this point home. But you don't need to paint the bottoms and you don't need to sell the tops. You can buy in trending markets and make money. But I think the same is true for buying before we hit a market bottom. Bitcoin moves in a parabolic nature. If you look at many of the periods of uptrends, they happen in a matter of days, right? When we get these big moves up, it's a matter of days, and price moves 10% in a day, and then another 10%, and then another 15%. So it's like the price action happens very quick, and you have a very short window to buy in. That being said, if you are looking out with a longer term time preference, I don't hate taking a shot at Bitcoin at around 60K. Like I said, we saw significant supply absorption here before. Wouldn't be surprised to see buyers step in again. But I think we need to step back and look at some of the on-chain metrics that CJ was referencing earlier. And I think those are very important for determining exactly how low we can go. And then one thing that I'll add is spot ETF flows. I talked about them on Tuesday, but they've actually gotten more net negative. So we've seen more ETF outflows this week than we saw even last week. So that makes me think that we're going to go lower. Historically, we've needed to see spot ETF inflows, and that in conjunction with government treasury inflows in order for price to rebound from a bear market. But that is a great indication of kind of when we are bottoming, is when those players are stepping in, because really, if the spot ETF isn't driving price, what's it going to take to drive price? So, I think that will be an important metric to watch out for. But there are plenty of good on-chain metrics that are all pointing towards right around the 45K level right now.
Yeah, I think I would wait before 60K. I don't know. I think the main reason why I want to wait to scale in before 60K is like, what if stocks drop 20%? Like Bitcoin could even go to like 30 or 40 on some absurd wick if something actually does break. And I know many of you who follow, Bitcoin or crypto or just watch the news in general. Michael Saylor was on. He was looking a little bit nervous when asked, can you refinance the debt? And he's just kind of assuming that banks will lend to him regardless of the price of Bitcoin, which seems a little presumptuous and, dare I say, naive. But let's talk about stocks now, because I do want to bring up some charts of the Dow, because I think it's important to be aware of that, potential correction in stocks, because that's clearly it's already impacting risk assets like oil. I think I'm probably wrong on that idea, because it's already starting to trade in correlation with risk assets. But let me focus on the Dow. I talked about the potential of a 10% correction in stocks. What I have here is cycles. I don't think Bitcoin is the only asset that goes through cycles. We've seen many 25-year periods in the S&P where we've seen 4-year cycle lows apart from one another. Interestingly, in early 2018, which again was the start of a midterm election year, we did have a top, or at least a local top, in early 2018, and then the Dow finished at about an 18% correction through the end of that year. Now, from the highs of the previous bull market, the Dow ended up rallying about 37, 38%, then topped in early 2022, which is also the midterm election year. And now about basically exactly 4 years later, we have rallied 37% from the previous high, and we are in the early portion of the midterm election year. So I can understand the desire not to want to be short. I totally get that. Shorting the stock market is a losing trade over time. But from my perspective, I just don't want to take the risk of being long. I hope you guys can understand where I'm coming from that perspective. I also think it's kind of interesting. Yesterday, Pam Bondi, when questioned about a lot of the Epstein files, tried to distract by saying the Dow is at 50,000 and the S&P is at, almost 7,000 or wherever it's at, trying to distract from the clear issue at hand. So maybe this isn't like analysis, but I do think, markets do have some kind of way of like some karma might come back to that. That's what I worry about. Also, and my final point in terms of the broader equity markets is, well, I guess I should go to this one as well. This is just a bull and bear indicator from Bank of America. But, this is showing very strong confluence from where we were at in February of 2018, the previous peak. So that's something that's interesting to me. And, late 2021, we were at these levels as well. So I just think there's a little bit of risk out there that we should be cognizant of, because I'm always obsessed with risk, even if it's kind of to a fault, and I miss a lot of opportunities as a result. Something that struck me was this headline from The Economist. The Economist has a great track record of, if you go out about 6 months to a year after they put some type of theme on their cover, usually it's a good counter indicator. At least it has been historically. This is from February 7th. So this has kind of been circulating around. And, if we look at the dollar, it's kind of in a very similar cyclical place as the Dow as well as Bitcoin. Let me pull up the DXY here. So midterm election years, we have a tendency to see corrections in, risk assets, and the dollar has had a tendency to do pretty well. The prevailing sentiment has been rate cuts going into, this year and the latter half of this year once Jerome Powell leaves. But I think everybody, including myself, was taken a little bit off guard by, the new Fed chair. Trump basically picked the most hawkish person he could. And that's been, that resulted in a pretty strong sell-off in Bitcoin and many other risk assets. But as we see here, very similar time frame, January of 2017, we had a peak in the dollar. Then once the midterm election year in 2018 started occurring, nice 14% rally in the DXY. Similar thing in 2022. Obviously that was, I don't know if we'll go that parabolic, right? Because we're in a very strong rate increase environment. But from a cyclical perspective, purely speaking, we are at the time frame where the DXY has historically created macro bottoms. And it's not trading too well today, but it is hanging in there a little bit. Let me bring up the CCI and some of our oscillators. They are rebounding a little bit from oversold territory, but I would like to see price be able to get above the 20-day moving average before considering any potential long trades in the US dollar. Last thing I forgot to mention about the Dow when I was just talking about it a second ago is the CCI as well. Yesterday we had a bearish hanging man candle at the top of an uptrend, wide divergence from the 20-day moving average, CCI pointing down, all your classic signs of mean reversion from the 7-point trading checklist. Now we are falling to what looks like potential support, and we'll see if that ultimately holds. Last thing I'll just mention very quickly, I think this idea might not, the fact that everybody was betting on a breakout of oil, and I saw, retail traders get a lot long. The fact that we're still correlated to risk assets makes me not like that trade as much as I have in previous.
Yeah, no, I agree. I think that trade is still on the table for me. It's still one that I'm watching closely, but it does feel a little bit crowded right now. But I think your greater point of, just kind of us entering a risk-off environment, I think it's very important for people to understand, because Bitcoin, although it didn't show a positive correlation to the upside when the stock market was making new all-time highs, you can definitely expect there to be a correlation to the downside when assets go risk off, to see Bitcoin kind of slide with the risk on assets. So good stuff, CJ. And we got a few questions here I want to hit.
Yeah, if the oil thing, I think you got to give it like 2 years, maybe 1 or 2 years. I'm not holding it anymore, but it seems like everybody was betting on that breakout, and it just had a pretty big fake out today.
Yeah.
Sorry to interrupt, though. Let's talk about these questions.
Yeah, sure. So good one from Absurd Nerd. Cool username too. Considering the historical pattern of Bitcoin, would an inverse ETF be something to consider? So yeah, that's a great question. And, you know, a lot of my friends have been asking, you know, when should I buy Bitcoin? Or they've been asking, like the title of this episode, how low will Bitcoin go? You know, I think that that's, people really want to put their money into something and they want to speculate, but right now there's just not a lot of, you know, assets to go long into. And I think that if you look at some of the Bitcoin inverse ETFs, they are looking pretty favorable right now. BTCZ is a 2x inverse Bitcoin ETF. So some pretty big volatility with this one. If you're trading options, it's pretty expensive. And as you can see, over the last month, we've seen a big increase in volume in demand for this 2x inverse ETF. So it's becoming pretty liquid, actually. So you might be able to get a pretty good fill on this one because of the liquidity. But looking at this from a technical perspective, right? We got rejected right at the previous swing high here. And what I could see happening is kind of us forming sort of a cup and handle here, where this is the cup. We come back up, retest this level, get rejected, come back down towards the moving average, and then ultimately form the handle that grinds us higher in up towards the $10 level. So, you know, right now I like it up to 720 for sure. But I think once we get up to 720, you're going to start to see some resistance, because historically this has been a level of critical resistance for this inverse Bitcoin ETF. And then also Bitcoin will be coming into critical resistance as well. So, and we talked about the supply absorption that we saw at this level as well. You can expect to see that again as we retest this level for a second time. Maybe not to the same extent that we saw the first time, but still you can expect to see some supply absorption as we dip around 60K, because like Mike points out in the comments, you know, 60K isn't a horrible level to scale in at. And I think a lot of people are looking at this with that same mentality, saying that, hey, 60K in the grand scheme of things isn't that bad. So I think we're seeing a lot of buy pressure come in because of that thought. But again, you know, a lot of buyers stepped in here and injected a lot of capital. The second time around, when you test the level the second time, it gets a little weaker. And I think that, you know, the second time we test this, you're going to need to see a lot of volume come in order to surpass this level, especially if we see the Dow pull back. So, yeah, I do like the Bitcoin inverse ETFs right now. I think that those are a solid option for speculation, but just be wary of kind of the levels of technical resistance, because we do have some levels of critical resistance overhead.
Yeah, I think you got to be careful with the recompounding aspect every single day with the, you know, I think futures might be an interesting idea as well. I know they have really high margin requirements, but now they have also Solana and XRP ETFs. Typically those underperform Bitcoin even more in bear market conditions. Same thing with Ethereum. So, and if you think Bitcoin's cheap, like, this is kind of the idea I've talked about with altcoins in previous cycles. Like, just because an asset looks cheap doesn't mean it can't get a lot cheaper. And this is buying an asset that's making continuous lows is the same premise as shorting something like silver a couple months ago when it's making all-time highs. Like, I would rather wait till the trend actually shows some type of stabilization and normality before, you know, just dollar cost averaging and whatever. Personally, my goal this year is not to like triple my net worth or anything like that. It's simply not to lose money. And because there will likely be better buying opportunities in the future. Bear markets are ultimately what make people wealthy over time, because they provide lower asset values to create optimal buying opportunities. So even though Bitcoin looks cheap, I'm going to just hold off a little bit. And you know what? There could be counter trend rallies in this bear market as well. You know, it's a reflexive asset. Clearly, it's going down very quickly. But Stan Chartered, the same bank who called for 250 Bitcoin, you know, a few months back before the top, they're now saying Bitcoin could go a lot lower. And a lot of people who denied the 4-year cycle are now embracing the idea of the 4-year cycle, which I think potentially sets up for the possibility of a counter trend rally. So from my perspective, it's all about how you size the risk, but I would rather not lose money shorting if we get some potential counter trend rally and just wait for an optimal long setup. Because there are Bitcoin's not the only thing you have to trade, right? Like it just fell 50% in a straight line. It's tough to short it and sell it in the hole down here, but I think other assets, even like XLE, you know, I know AJ put out a trade on that one a few days back. It's probably coming down pretty well today. You know, it's you're stepping into the eye of the storm here with Bitcoin, and I think, well, actually not, because the eye of the storm is the calmest part. But you're stepping into the storm, is what I mean. Okay.
Yeah, and I think every dollar that you have to invest later on in this market cycle is a win. So any money that you hold on to on the way down is a big time win. And the more capital you have to invest when things start to look better, the happier you'll be. Like right now, like CJ said, trying to long Bitcoin here is very much like trying to short silver on this way up. Like you're just fighting the trend, and that never really works out. I see Steve asked, do you prefer BTZ over SBIT? Both are 2x inverse. No, I don't have a preference. If you look at the charts, they're almost identical. I'll pull up SBIT real quick, but you can see from this chart here, you know, it looks very similar from a technical perspective, the same levels of resistance overhead. You can see here, we reached previous high that was met just a few days ago when we sold off here. Less of a wick prevalent here, but still, nonetheless, you can expect to see some sell pressure as we reach this level. But I don't really have a preference over SBIT or BTCZ. I think they're both valid options for trading inverse Bitcoin. But like CJ said, you know, just be careful with this because there can be counter trend rallies. Bitcoin likes to surprise people and do things that are kind of unexpected. So don't be too surprised if we get some sort of counter trend rally amidst this bear market that kind of wipes out a lot of the short positions. That is what we've seen historically from Bitcoin. And I wouldn't be surprised to see bears get wiped out on the way down again. Because even in a 4-year market cycle, we still see periods of positive price action on the way down that are substantial enough to make people cover any short positions. So still very important, and I think worth noting.
Bear markets have a tendency to make both the bears and the bulls look very foolish because they're just difficult to trade.
Yeah.
In terms of preference for those ETFs, I would just look at the expense ratios, compare them, and then compare which one has more assets under management or which is more liquid.
SBIT, yeah.
Yeah. So that's really all I look at when it comes to comparing ETFs and things of that sort. Anything else? That I've hit all the points that I'd like to hit today. Would love to take questions from the audience, of course, like always. But you know, I'll leave it with you, Monty.
Yeah. I think that's just about all we got for today. I want to thank everyone for participating with some really great questions today. Always makes our time a lot more fun, and hope we answer your questions to your liking. But if not, you can always drop in the Telegram and ask us any questions you want in the Telegram, and we're more than happy to answer. If you don't have access to that yet, you can scan the QR code right below CJ for a free 15-day trial. No credit card required. You can get free access to our Telegram group, our education curriculum, weekly market reports, trade insights, and a whole lot more. So definitely check that out. And I just want to say again, thank you guys so much for watching. We'll see you again next week. Take care and happy trading.